Today, we're seeing the dollar pull back, so it's bouncing, but it's a tough scenario for Bitcoin here. And I do think it's going to ultimately go lower. Doesn't mean if the dollar pulls back a little bit more, it won't have a small bounce. But I'm hard pressed to find a scenario where Bitcoin doesn't at least go to 12 to 13,000 before putting in a bottom. And I have a worst case scenario that's well below 10,000 on Bitcoin. So I think it's important for Bitcoin investors to realize that this is the first bear cycle that the Fed is not printing money during, right? And so you have to take that into account when you're doing your cycle. So if previous cycles saw an 80 to 85% correction, you got to think this one would at least do 80 to 85%, which would be 12, 13,000. And it might even do more.
Almost 10 days into September, market volume in Bitcoin has started rising as traders return to action following the summer break. As volume returns, so does volatility, with this week showing both high levels of bullish and bearish sentiment in the token. Looking forward to the remainder of the month, the main question is undoubtedly whether either of these can prevail, or will price consolidation continue for another month. Hello and welcome to Money Talks. In today's video, President, CEO, and Chief Market Strategist of InTheMoneyStocks.com, Gareth Soloway, updates about Bitcoin's price performance, chances of a breakout or a full-blown bottom, and his opinion on the current market uncertainty and its impact on the global economy. Gareth also explains his thoughts about recession, inflation, and the Fed's next moves. Make sure to stick around till the end of this video where Gareth Soloway reveals why an all-out panic is still to come in the markets.
Yeah, so I think overall it's a negative, right? Anytime you have this potential geopolitical scenario, especially after Russia invaded Ukraine, it just opens a possibility that it could happen with Taiwan. It definitely puts people on the back burner. Now, the key is this market has been going up and down inversely to the US dollar. And we know that the more instability, the more upside on the dollar, right? More people hide in the US dollar for safety. And so that, again, just right there is a negative for equity markets, for crypto markets, for gold. Nicely enough, we have potentially seen a major reversal in the dollar today. So we might be seeing a short-term top there, which would be positive for risk assets.
Last Friday saw the release of August non-farm payrolls, or NFP, which showed that 315,000 jobs were added to the U.S. economy. Although the labor market continues to be the bedrock of optimism in the United States, it has not been enough to avert attention away from the inflationary crisis. Despite the better-than-expected NFP number, Bitcoin fell to two-month low the day after the data was released, dropping below $18,600. Since then, prices of BTC have mostly consolidated, trading between a floor of $19,500 and a resistance of $20,200. Some attribute this rally to comments from Fed Chair Jerome Powell, who all but confirmed that rate hikes will continue until the job is done.
Because what you're seeing is essentially the Fed is trying to lead this push, and they're talking so aggressively hawkish. Now, I believe it's a lot of talk. I'm curious, once we tick into recession, how quickly they back off from this hawkish talk. But I think they're trying to talk a tough game to make sure that inflation kind of stalls out here and does come in. But I do think raising rates sucks money out of the system, right? So just like printing and lowering rates drives money into the system, it makes money free or at least cheap. The opposite is occurring. So it's a supply-demand economics problem where when you take dollars out of the system, inevitably the dollar should strengthen. And especially since we're acting more aggressively than the ECB or the Japanese central bank, it's going to strengthen the dollar against those currencies. So it's a weird time right now because you're coming off of the COVID lockdowns and stuff like that. And then obviously there was the surge and then kind of the reflex retraction there. So I think it's one of the most hard times to really figure out what is a recession, what isn't. For me, what I'm going to look at is I'm going to look at the jobs numbers. You start to see a significant uptick in unemployment. We did see a tiny uptick in unemployment last Friday, but it was mostly due to people coming back to the workforce. I think that over the next few months, you're going to see that unemployment rise to 4%, a little bit above. And then once we see the GDP numbers remain weak plus that, then it's like, okay, this is a no-brainer official recession that you could call it that at that point. I mean, I have it penciled in for a 50 basis point at the end of September hike. So again, for me, now there's a lot of talk and the markets are even saying it could be 75 basis points. I'm thinking the Fed is, at least I hope they're smart enough to understand that they can't, and it's very dangerous to continue aggressively hiking rates. Because again, each rate hike takes a certain amount of time to work its way through the economy, right? Mm-hmm. So if you hike 3 times in a row, 75 basis points, and then all of a sudden in 6 months, we're in a deep recession, ask yourself, how do we get out of that recession? Because every past recession, the Fed has come to the market's rescue. QE, QE1, QE2, QE2. And I mean, you just went on and on all the way through COVID with printing money and lowering rates. And so the Fed can't do that anymore with inflation as high as it is. So I really hope they're careful. I think that they're starting to see those signs of weakness creeping in like they want, the inflation numbers coming down. And I think that that would be the goal here, to start that. They can always do 50 again later in the year if they want to, but starting to just bring it down a notch would be a very confidence boosting thing for the economy and for the markets. My thinking of, and why I'm net longer term bearish, is that I do see us going into a recession. Even if they start kind of coming down on the hikes less and less, we're still headed into a full-fledged recession. And again, I think once the market realizes the Fed can't bail us out of this recession, the market's going to freak out. It's going to say, okay, this could be a long, drawn-out recession, making up for all the lack of recessions that we've seen over the past 10 plus years. And that could be this kind of stagflationary kind of period in the markets. And I think that's the culprit for the next big leg down that takes us down to the pre-COVID low highs from 2020 and even below.
Ultimately, in the short term, there looks to be a rise in bullish sentiment. However, as this sentiment grows, so will the questions on how long this can potentially be sustained. Based on this, some may expect further consolidation during September. However, it could take place at a higher range than August support and resistance levels. A key indicator in September will be the RSI and the possibility of it breaking out of 61.5. If this should happen, BTC will likely be above $23,000 by the end of the month.
Yeah, so definitely something I paid attention to, because I think it's like that first showcase that governments are going to be very aware of economic hardships. And so, everyone says that, the Fed can't print. And I've even said that to you, that it's going to be tough for the Fed to print when inflation is still elevated. But I do think that there is a point. I mean, there will be a tipping of the scale where if things get bad enough, even if inflation's at 4%, the Federal Reserve will start to print again. I mean, imagine inflation's at 4%, but unemployment's at 15%, right? You can't tell me that the Fed's not going to try to stimulate, that the government and the politicians that are trying to get reelected are not going to try to stimulate. They will absolutely. So there's this point where things will get so bad, they will start to print again. And that's where gold becomes key. I mean, so many of these metals and inflationary things, like even Bitcoin at a certain point, becomes a no-brainer. And I think South Korea was just kind of that shot across the bow. It wasn't any major intervention. It just shows the willingness for governments to step in when things get rough.
According to the Federal Reserve's dot plot, the central bank now intends to raise rates above 3.5% in 2023 and not retreat below 3% until after 2024. The dot plot represents the Fed's expectations of future interest rate levels. So how do you think Bitcoin will perform amid the current market uncertainty? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.